Hello and welcome everyone. Welcome to a new week. We have quite a lot of things happening in the markets today. So we'll be trying to understand what is causing all these, why are the markets so volatile. And once we understand these, hopefully everyone will be able to trade from an informed perspective. So my name is Rufus Kamau, markets analyst at FX Pesa, and you are basically watching the live market snapshot, a series that we do every day, Monday to Friday at exactly 11 a.m. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So I would like to begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade, so you should always do your own due diligence and practice proper risk management. So morning Francis, morning Molenga, and morning another Francis. Thank you guys for joining. Morning Wangari. So the topic for today will be Japan's reverse carry trade, and why indices are plummeting while the Japanese yen is soaring. So I'm sure if you have looked at your charts, you've seen quite a number of assets being extremely volatile, especially equity indices. And at the same time, you've seen the Japanese yen strengthening across board against other currencies. So let's begin by looking at the economic calendar, see the highlight of the week and the things that we are expecting to see in the markets this week. So from the economic calendar, what we can see is that today, being the 5th of August, we have a bank holiday in Australia, meaning that little to no activity is expected from the Australian dollar against other currencies, whereas the market are currently very volatile. We had quite a number of low impact news happening in the morning, including the MI inflation gauge of Australia, which came in a little bit higher at 0.4%. The ANZ commodity prices index showed a slight worsening to negative 1.7%. Then the services PMI in China came in at 52.1, a big improvement from the previous reading of 51.2. And for the rest of the day, we'll be having more data, including the Spanish services PMI. This is already out, the French and German. It seems like there's an improvement across board for Spanish, Italian, a slight miss in the French PMI, but the German services PMI seems to have improved. And the overall data for the Eurozone came in at 51.9 as expected. So for the rest of the day, we won't be having much. Yes, there's a bank holiday in Canada. We don't expect much from the Canadian pairs. And the big news for the day will be the ISM services PMI as well as the final services PMI affecting the US dollar at both 4:45 p.m. and 5 p.m. later in the day. So fast forward to tomorrow, we'll be having pretty big news early in the morning before we do the next market snapshot. So in this case, we'll be focusing on an interest rate decision by the Reserve Bank of Australia, where there is a big expectation that the Reserve Bank will not be changing interest rates. So we expect the Reserve Bank of Australia to be holding rates steady at 4.35%, and then later present a press conference at 8:30 a.m., which might increase volatility in Australian dollar pairs. So the rest will be happening later in the day, so we'll have sufficient time to cover that on the next market snapshot. So highlights of the week, we'll be having employment data from New Zealand on Wednesday at 1:45 a.m. Then a speech from the Reserve Bank of Australia, Governor Bullock, at 5:40 a.m. on Thursday. Inflation expectations data at 6 a.m. On Thursday. Then we get unemployment claims, which is a weekly data point in the US, showing the number of people who are basically claiming for unemployment insurance. Then we'll be getting inflation data from China on Friday, followed by employment or the jobs data from Canada on Friday at 3:30 p.m. So clearly, on the economic calendar, it's a little bit thin and nothing much is expected. But several things we might need to understand. So one, the Fed, or the Central Bank of the US, Federal Reserve Bank of the US, has announced that it might be conducting an emergency meeting today, which is not on the economic calendar, to respond to what's currently happening in the markets. And potentially, the market is expecting that the Fed could authorize a rate cut later in the evening to support the markets, having seen what's currently happening with the reverse carry trade in Japan. So let's get to the bottom of this. So earlier on in the day, I've done a thread on what's currently happening, and it's available on X. If you want to check it out, you can check out my handle at RufusKE. So if you just woke up and are wondering what's happening with the market, grab a cup of tea and buckle up. Let me explain. So what has happened in the markets this morning, and of course, there has been more developments. So these are not the exact prices. So the USD JPY currency pair was down 0.85% in the morning and down 10.31% from the 3rd of July. The yen has strengthened after a surprise 15 basis point rate hike to 0.25%. So we also last week, the Bank of Japan increasing interest rates in a surprise decision, and that has caused a lot of movements in the market, as this has triggered what we call a reverse carry trade. So I'll be explaining it later in the presentation. So Bitcoin is down at this moment over 13%. In the morning, it was about 7.66%. And if you look at in the last 1 week, we are looking at figures that are above 20%. Ethereum down over 30% in the last 7 days. And this is spreading to other cryptocurrencies as well as stock market indices. So the Nasdaq was down 2.13% in the morning and 13.25% from its recent all-time high, which was recorded on 11th July. And this is officially a correction territory. And if the losses continue increasing, if we get to 25% down, then we will basically be entering a crash territory. So last week on Friday, Warren Buffett declared that Berkshire Hathaway sold 55.8% of its Apple stocks in Q1 and Q2, and that's an estimated 505 million shares. So it's quite a big thing happening in the market, especially when you consider that Apple has largely been Warren Buffett's biggest stock holding. So by selling over half of his position in Apple, it represents a clear direction, or basically a vote of no confidence in the US stock market, basically saying that the stock prices are overvalued, and now we might be seeing some changes. So Japan's Nikkei 225 index was down 2%, but then this extended further, and the stock market closed over 10% down this morning. And this was as a result of the carry trade, which, as I explained, I'll be explaining later. So last week on Friday, it dropped 5%. So now we are looking at an index that is down over 20% since its all-time high. So the Tokyo Stock Market Index, the TOPIX, is down 5.73% today and down over 17% in the last 30 days. So the Korea Composite Stock Market Index was down 5.55%. The market was halted several times in the trading this morning, and it's down 11% over the last month. And most importantly, the US 10-year Treasury bonds are down. Earlier on the day, it was 3.779%. It continued dropping, and I believe around this time, it's around 3.5%. So we are seeing basic panic in the market, and almost everyone is selling. So how is Japan involved in all this? Well, brief history, Japan cut rates to 0% in 2010 and then to negative 0.1% in 2016. And this ensured that the cost of money remained close to zero. So when central banks cut interest rates to near zero, in that case, they are trying to stimulate the economy. For Japan, it was basically attempting to fight deflation, where prices of goods and services were reducing instead of increasing. So Japan was really struggling with that. So this led to Japanese and international investors borrowing from Japan at near zero rates. and investing majority in the US for higher returns from US bonds, stocks, as well as cryptocurrencies. So I'll be showing you that data point right now. So if you look at the Japanese interest rates, you'll notice that the last time they were highest was back in the 90s. Then they dropped the interest rates to 0.5%. This was close to zero. And then they kept these interest rates low for almost 3 decades. So during the 2007-2008 stock market crash, there was a slight increase to 0.5% before the interest rates were later dropped to 0.1% in 2010. So fast forward to 2016, Japanese interest rates entered negative territory. Then from there, notice that the first time that Japanese interest rates moved from negative territory was in March earlier this year, where Japan hiked rates by 20 basis points, shifting above zero and getting to positive 0.1%. So in the most recent meeting last week, we moved from 0.1 all the way up to 0.25%. And this has had quite a significant impact in the markets. So if you look at the inflation rate in Japan, for instance, in the past 10 years, you'll notice that most of the time inflation was below the target of 2%. So sometimes even reporting negative, and the highest numbers we are seeing was around 1.5%, all significantly below the target of 2%. Then fast forward to April 2022, and this was during COVID, when for the first time inflation jumped to 2.5%. So since April 2022, we have seen 2 consecutive years where Japan has not been able to reduce inflation back to below the 2% target. So inflation has remained significantly high, hitting a high of 4.3% in January 2023, then a low of 2.2% in January this year, and then remaining elevated for the better period. And as for the last reading in June 2024, inflation was at 2.8%. So right now, Japan is struggling with this high inflation and attempting to get inflation back to the target of 2%. So by hiking interest rates, Japan is trying to reduce inflation. And at the same time, we are seeing Japan trying to control the weakness of its currency by intervening in the forex market. In this case, imports in Japan had become very expensive because the Japanese yen had lost so much against other currencies, especially the US dollar. So we'll be looking at the charts later to see how the Japanese currency has performed. Somehow I just realized I wasn't sharing this. So I'm trying to share again. So if you can hear me clearly, kindly confirm on the comment section. So this is the chart I'm currently sharing. So this is how inflation remained above 2% since April 2022 up to the current date. As of June this year, inflation was still at 2.8%. So I'm still checking the comment section to see if you guys can still hear me. So morning, Jason. I can see Trapskade in the house. Morning Mujombi. Thank you for joining. Francis Waroy, Smile, Drew David. Thank you all guys for joining. Thank you, J Squad. So let's continue with this. So now that we know what Japan has been trying to achieve, we continue with understanding what the carry trade is. So Japan's monetary policy also involved massive Japanese government bond purchases. That basically means printing a whole lot of yen, and this was meant to fight deflation. So the Japanese government has been printing a lot of yen over the past couple of years, and this was meant to boost the economy for recovery after beating COVID, and at the same time try to stimulate activity and see the prices and wages rising in the country. So the investors holding Japanese yen denominated loans also benefited from the JPY losing value to the dollar as the Bank of Japan increased the yen supply. So in January 2010, the USD JPY was trading at 90. So 90 JPY would get you $1. And now the yen continued weakening. And as of July this year, which is last month, we saw the yen trading at 161.9. So you can see the big shift from 90 all the way to 161.9. So this is a way over 60% loss against the dollar. And it basically meant that if you borrowed from Japan at 90 and now you're paying at 161, then you're basically making some big forex gains. So for a lot of investors and institutions that borrowed from Japan and invested in the US, they borrowed at relatively low rates and now they are relatively high rates, and now they are paying with low rates and making a profit on the foreign exchange transaction. So the yen carry traders enjoyed this since their forex earnings lowered their obligations. So as of April 2024, Japan was the biggest holder of US bonds with an accumulated position of $1.15 trillion. So as the US hiked interest rates from 0.25% in March 2022 to 5.50% in August 2023 and kept the rates there up to date, more investors borrowed from Japan and invested in the US, and this built a massive collection or corrective carry trade. So with a lot of investors having this exposure, there's a number of things that have changed now. So first, the Bank of Japan hiked rates from March from negative 0.1%, as we have seen, to positive 0.1%, and then in the latest, they moved this to 0.25%. So this was done to tackle high inflation that was making Japanese imports expensive and terrorizing Japanese household consumer budgets. So within the same period, Japan removed the yield curve control program that locked Japan's 10-year bond yields at plus or minus 0.5%. So we saw Japan changing this over time. At first, it was 0.25%. They expanded to 0.5%. They expanded to 1%. And then now removed the cap. So by removing the yield curve control program, it means that the 10-year bonds can now trade freely and they can have much higher yields. So those yields moved from 0.5% at the start of this year, and then they hit 1% earlier this year. And now the current rate on the 10-year government bond in Japan is at 0.97%. So these yields are increasing and making the JPY bonds more attractive for investors. So we are seeing capital flowing back to Japan. So this led to a strengthening of the yen from last month's low of 161.9 to the current price level, which is around 144.9. So this means that the Japanese yen has gained about 11.3% to the dollar in 1 month. So if you are holding a loan that is denominated in Japanese yen, then your loan is now getting bigger. So when the yen was losing, you are benefiting from that. But now that the yen is gaining, having gained over 11.3% in the past month, now your loan is becoming bigger and it's time to reconsider that position. So anyone holding JPY denominated debt and invested in US just got their debt increased by 11.3%. So the returns they get or the returns they are getting from US stocks are currently going down because the equity indices are down into correction territory. The Nasdaq is down over 10%. The SP 500 is down almost 10%. The Dow Jones and so on. So bonds are also not doing well. They just got reduced since the bond yields are tanking, and equities are entering correction territory or are already there. So the interest they are paying on JPY denominated debt. So remember, the interest rates were very low and close to zero. But now that the Bank of Japan moved from negative 0.1 and now is at positive 0.25, it means that if you are still holding your Japan denominated loan, now you'll pay with higher interest. So everything is going bad against people who are in the carry trade, and now they are trying to reverse that carry trade. So what's the reaction so far in the markets? So investors are dumping US bonds at losses, US equities, though these ones are mostly in profit, albeit the recent sell-off. They're also dumping their Bitcoin and other cryptocurrencies to repay their JPY denominated loans before the Bank of Japan hikes rates further and the JPY strengthens further and before the Japanese government bonds become more attractive due to increasing yields. So what could possibly stop this train? One, Bank of Japan cutting interest rates and implementing a yield curve control program with quantitative easing. Maybe that would do the trick. But from what we have seen with the Bank of Japan, they are not going to do it. For them, they are focused on strengthening the currency and basically getting inflation back to the target, which is around 2%. So now, nothing seems to be able to stop this train. So why is the market overreacting? When there's an arbitrage opportunity, and in this case, being able to borrow cheap from Japan and invest in the West, people can get very greedy. So people are not just buying these positions on spot. They were also doing leverage positions. So the JPY carry trade was levered, meaning it had leverage up to 10 times, which means that there is even more risk in the derivatives market, where a lot of hedge funds and other financial institutions were basically taking more leverage to take advantage of the free money from Japan. So anyone who assumed the Bank of Japan would hold rates below zero or close to zero forever without an appropriate hedge is now facing a very difficult situation. So, for instance, we saw earlier in the year Nvidia gaining over $1 trillion in market cap in the first half of the year. So the carry trade was the backdrop fueling this and the entire Magnificent Seven. So we could be seeing more of these happening. So on the next part, I'll be discussing something even more about this. So I'm seeing more comments in the comment section. Stay healthy, live longer. Thank you for your response that I'm audible. Thank you, Jason, Wangari, Patrick, Nancy Obino. Thank you for your responses. You can see questions are flowing in. So as always, if you're here for the first time, always remember to leave your questions and comments. I try to respond to these as we approach the end of the presentation. So let's get on with the expectations after this. So we know that Warren Buffett has been increasing his cash position. So him and a cabal of other major players in the market are holding insane cash positions. So like watchers, they will observe the panic reactions in the market and narrow down on some really good businesses and buy them at a huge discount. So the current market sell-off is basically a blessing for them, and they are looking to find the next cheap business to buy. So one key stock that I'm keeping on the watch list is a company called NVIDIA, which has been able to maintain a very positive increase in their earnings as well as sales revenue. So it's one stock to be on the lookout. So due to the heated political environment in the US, the stock market panic is not good for Biden as well as Kamala Harris. So we could be seeing a bailout of the trapped banks, maybe banks holding bigger losing positions. We could be seeing a negotiation with Japan to slow down on the carnage or to slow down on the interest rate hikes. Or even we could see a 50 basis points rate cut from the Fed to allow for easy money and the resumption of the bullish trend. So the money printer could come back on steroids. In the last week, US debt grew by over $100 billion. And in comparison, during the COVID era, when the US was doing quantitative easing to infinity, the average rate of printing was about 150 billion per month. So notice 150 billion per month during COVID period. And last week we saw US debt growing by 100 billion within a week. So we could be seeing more money flowing into the system, leading to a recovery of the stock market. So that's an expectation. And of course, stocks with significantly high price to earnings ratios could take a huge beating today as investors rotate to defense and consumer cyclicals. So if you check the aerospace and defense stocks today, they are probably doing well in pre-market trading. And once the New York stock market opens in the afternoon, we could be seeing more price action activity. So there are factors to be considered. There are risks while we continue with the day. For instance, we know there is an existing conflict between Israel and Iran, where Iran decided or promised to retaliate against Israel. And out of analysts are expecting that Iran could potentially strike Israel today. So we don't know whether this will happen, but if there's any form of retaliation, then this could add a wild card to the markets today. So we could be seeing the US opening up the Fed printer as, of course, we could be seeing Biden looking to support Israel. So that's one of the wild cards to consider today. On the energy sector, an all-out war in the Middle East could disrupt major oil supply chains and lead to a shortage that would increase oil prices to over $100 per barrel, especially for Brent crude oil. So whenever there is uncertainty in the markets and fear and panic, then we see investors going for safe haven assets. So in times of war and other similar risks, investors might go for gold as well as the US dollar. So we could be seeing a short-term rally in the DXY and a big rally in gold. And the main reason there's a focus on gold is because gold has been performing better all year, better than treasuries, and it's currently rivaling the performance of the SP 500. So gold seems like a good bet going forward. So we could also be seeing some activity in Bitcoin, even though there's a big sell-off right now. We know that the big banks that got the spot ETFs are currently still buying even at lower prices. So BlackRock is currently stacking Bitcoin as if its life and books depend on it. We know that bond holdings are not doing pretty well. Those valuations are really low and holding massive losses, as well as real estate investment trusts. So now that stocks are plummeting, the only asymmetric bet left for big banks like BlackRock seems to be Bitcoin, and the panic is yielding discounted prices. So those are some of the key considerations for the day. So now that we know what's currently happening, I believe it's time now we try and visualize the charts and see what may have changed and the major trends that are currently emerging. So let me share my trading application. So this is the MetaTrader 5 trading app. I'm hoping everyone can see this. So let's do the highlights first. So one, we look at the dollar index. Clearly, it has been bearish. There was a big sell-off on Friday, down about 1.12% and an extension of the same. So between Friday and today, we are down 1.76%. We haven't seen the dollar index trading at 102.34 in a long time. So with the dollar index being pretty weak, other currencies have benefited from this. For instance, the Euro USD made a breakout last week and has only continued with a bullish momentum. So when there's a weak dollar, it's easy to trade. In this case, by targeting other stronger currencies and buying them against the dollar. So if you look at all these other currency pairs, USD against the Swiss franc, big sell-off. Pound USD, we can see the pound coming back and strengthening against the dollar. Pound against the Canadian dollar. Dollar against the Canadian dollar. Yes, the Canadian dollar was weak, but now we are seeing a very strong reversal playing out. So from the 4-hour chart, it's a very strong shooting star. For those who understand a shooting star, then you can see it's a very strong rejection of higher prices, which implies that we could be seeing the dollar trading lower against the Canadian dollar with targets around last week's low. So we could be seeing 1.379 playing out later this week. So Australian dollar, was pretty weak earlier in the day, but it's making a very strong recovery against the dollar. So some further bullish momentum could be expected for the day, perhaps even getting to this level of 0.65258, similar to New Zealand USD, which also made a big sell-off and then made a reversal. So we could be looking at Friday's high as a target around 0.59816 on the back of a very weak dollar. So the candidate for the day is, of course, USD JPY, which has seen one of the craziest volatilities, with the market dropping about 12.45%, regaining a little bit, and now it's down about 12.13% from the recent high that we saw on the 3rd of July. So now the big sell-off continues as the yen continues to strengthen. So any attempts to move higher are met with more or with further selling. So in this case, we should be expecting to see some further downside momentum on the USD JPY currency pair, with potential targets around 140.28 price level for the short sellers. So there's still more downside or more room for downside. So we could be seeing the market moving further towards the 140 price level. So as for the precious metals, they don't seem to be responding well, especially for silver, after attempting to make a bull rally last week. And then this failed to materialize. The market sold off on Friday, and now it's moving further downwards, which means that the market could be retesting the support areas that we saw last week. So in this case, if you go to the 1 hour chart, you know that this area seems pretty important for silver. So further downside momentum would imply that we see $27.545. So for gold, it's a similar thing. Failure to hit a new all-time high last week led to insane selling pressure. So today, after an attempt to move higher failed, now we are seeing further downside momentum, which may imply that price keeps going down and potentially we get to 2,400. So if you're trading the two metals, you have to be very careful. Remember, the Middle East tension is quite a wild card that could imply that gold changes direction. So if there was to be further escalation or even a strike on Israel, then we could be seeing more safe haven bets and gold would skyrocket higher, breaking the previous all-time high of 2482. So for now, it seems more of a short position, but if something develops in the Middle East, it's very easy for gold to make another rally and break the previous high. So easy trades have been seen this morning in US equity indices, with a big sell-off happening in the SP 500. So right from the closing price on Friday, SP 500 was down 2.93% before making some recovery. For the NASDAQ, we had a big sell-off. This was about 6.24% before making some recovery. And the same case has happened with the Dow. So a big sell-off from last week's closing price, down about 1.2%. So there's that expectation that in the London and the New York session, we could be seeing some further sell-off. And if this continues, then it could present some nice short selling opportunities, including the NASDAQ, which seems to have made some strong recovery. Yes, there's that Fed meeting, and it hasn't been announced yet. So if the Fed decides to cut interest rates, then that would support the stock market, and it could make some recovery. However, if there's no announcement of an immediate interest rate cut, then the big sell-off in US equities is expected to continue. So while the US has responded swiftly, we'll be looking at European equity indices to see how they may respond. So oil is not doing pretty well. It has been having quite a big sell-off. So there was a major trend line here on the daily time frame, which was broken on Friday. And today the market seems to be continuing downwards, which basically implies that oil prices could be headed lower to around 73.25 price level, following the breakout of this trend line. So now we could be seeing oil prices moving further downwards. However, an escalation of the tension in the Middle East would imply that oil prices begin recovering. So you have to take that with a grain of salt. Bitcoin had a big crash earlier on in the morning, hitting as low as $48,947 per Bitcoin. But then we are seeing a very strong recovery. So despite dropping by about 17%, there has been some good recovery. It's down 10%, and we could be seeing some further selling pressure. So this seems like a temporary recovery. But then we observe the New York session to see if the Federal Reserve decides to implement the suggested rate cuts. So European equity indices, we haven't seen any promise from the ECB to cut rates or support the market in any way. So the carnage is even worse. For instance, if you look at the last week's price action compared to today, stock market down 8%, some recovery, it's still down 7%. You look at the Euro Stocks 50, still having a strong bearish momentum, currently attempting a recovery, but the selling pressure seems to be much stronger. Same case for the UK 100 index, down 2.98%, made some recovery, down 2.44%. The French stock market index also had a big sell-off in the morning, opened with a gap down, went down 3.57%. Is currently making some form of recovery, but I would not be very confident of the recovery unless there is any fundamentals backing it. So look at the German DAX, it was down 3.46%, made some recovery, and we could be seeing some panic happening during the New York Open. So most importantly, the Japan's stock market index had one of the worst sessions today. So in the morning, right from the open, it went down by about 13%. Now it seems to have recovered, and it's down about 6% right from the open. But then if you compare these with what happened last week, for instance, between Friday and today, this was a big drop of 17%. And if you go to the 4-hour chart and you look at the most recent high, which was an all-time high, and then you compare this with the lowest price we have seen, this is a 28.44% drop. So whenever you see this, a drop in a stock market index above 25%, it's generally categorized as a stock market crash. And this literally took 3 weeks to happen. So we are seeing the market finding quite a strong footing around these areas here, but nothing has changed fundamentally. So unless there is something that has been announced, then the overall expectation is that the market will still attempt to move down further. So here are the favorite charts for the day, and what should we be focusing on? So one, the dollar is pretty weak, but it made a very good run against the Mexican peso earlier in the morning by gaining by about 5.97%, almost 6%. So you don't see currencies trading this way, making 6% moves against each other in a typical day. So in this case, with a pretty weak dollar in the market, I expect the Mexican peso to be making some form of gains. So we could be seeing the market pulling back downwards. So in this case, from the opening price here to the highest price here, I expect the market would make some form of reversal, backed by the weakness of the dollar. So that's a pretty good asset to be looking into. So the pound trading against the yen attempted to make a recovery earlier this morning. So if you go to a smaller time frame, the 15 minutes chart, you'll notice that this recovery didn't last for long, and now the market is ripe for a continuation, and we are going back to an 80.154. So the yen is currently the strongest currency in the market. So whatever you do, you are looking to be buying the yen against a weaker currency. So in this case, shorting pound yen might be a nice approach in the market. So the dollar is not doing particularly well. So if you're looking at, let's say, USD yen, and you go to a smaller time frame, say the 15 minutes chart, then you can see the attempt at recovery is being met by more selling pressure. So from the 1-hour chart, you can see there's more bearish momentum. You go to 4 hours, you go to the daily, they're all pointing downwards. So there's a good potential you'll see the USD JPY approaching the 140.288 price level. So that seems like a likely candidate to be looking for short selling positions. So the Nasdaq has attempted to make a recovery. We don't know whether the Fed will be announcing an emergency rate cut. So if we see evidence of sellers coming in here and pushing prices lower, then that could present an opportunity to go short further and benefit when the market keeps going downwards. So that's it for the day. So we'll be checking to see if there's any questions from you guys. Respond as we approach the end. So I'm seeing one question from J Squad. So from Drew David, US oil has been oscillating between $70 and $83. Could we be looking for a support from its current price? Could buyers come in and move the prices higher, especially with the Middle East tension? Well, if there's any form of escalation, it affects the supply of oil. We could be seeing the recovery begin around that area. So that's basically something to consider. So to respond to J Squad, this did not happen. It was only proposed. So Kenya did not get a loan from Japan. So another one from Oscar. Why is it that the Aussie didn't move much on FOMC and non-farm payrolls, but had a huge drop today? So remember, the Australian dollar is basically an Asian currency. So we are dealing with a very strong yen. So in this case, when things are not going well in Asia, you might see contagion. So the yen being pretty strong against other currencies, it also affects the carry trade. So remember, the carry trade is not just affecting the dollar. So people are borrowing cheap from Japan and investing in the rest of the world. So while some money found itself in the US stock market and bonds market, it also found itself in Europe, in some parts of Australia, some parts of New Zealand, and that trade is basically being reversed as we speak. So is it advisable to be looking for sales in indices? Yes, I think this is the way to go, especially for European equity indices. What do you think of a recession in the USA? We don't have a recession yet. What we are seeing is more of a panic attack as a result of the reverse carry trade, where Japan is basically selling its bonds in the US in order to cover the loans in Japan. What is the gold direction today? As I mentioned, it's likely that gold will continue weakening. But if something happens in the Middle East, then gold could strengthen and break into a new all-time high. So it's the one asset you don't want to be trading today unless you have facts to back your trade. So as long as there's an open, heated political environment in the Middle East between Iran and Israel, then being in a position in gold could be risky for you. So you have to take it with a pinch of salt. So from the question from Apollo, what's causing the huge volatility on BTC and other cryptos? I believe I spent the last 40 minutes explaining why, bit by bit, showing how the Japan's reverse carry trade happened. So if you joined it, kindly feel free to review or to rewatch the session after we end. So today, is there a Fed meeting? Yes, in the US, there will be a Fed meeting, so expect that. So this is very important. It will be one of the most important events of the day. It was not on schedule. It was not on calendar. So I believe if you do emergency Fed meeting, don't know if I can find this. I just Googled this. Fed emergency meeting amid historic Japanese stock market correction. So we'll be expecting an emergency meeting from the Fed. So be aware of that. So what is it that the Fed can do in the short term to reinstate investor confidence to support the US indices? This is a good question. The speculated recession has given a huge hit on them, leading to the current sell-off. So if the Fed decides to, let's say, announce a 50 basis points rate cut later in the day today, then that could restore confidence in the markets, and we could be seeing the US equity indices making an impressive recovery. However, if that doesn't happen, then we could continue seeing more panic selling. So that's why it's very important that you follow the emergency Fed meeting later in the day. So from Apollo today early morning, DXY was selling as well as other Asian majors, save for the Japanese yen. So cryptos, etc. Where was the money going? So money is going back to Japan. We are seeing Japan bond yields rising. We are seeing the Japanese yen strengthening and the Japanese stock market weakening. So yes, money is going back to Japan, the same place it came from when these other assets were increasing in value. So last question I'll be checking today is this one. If Fed convenes later on, there obviously will be lots of volatility. Bearing in mind the uncertainty in the market currently. So is today the best time to trade? Would be the New York session? Yes. So the New York session seems to be the best session to focus on today, where we could be seeing developments from the Fed. We could be seeing more news and updates from Israel. And now that would give us more factual information to trade from an informed perspective. So thank you very much, guys. Thank you for your time. Remember, we have a new episode of the Bullish Banter podcast. Make sure to check it out. So at 3 p.m., it will be live on YouTube as well as other podcast platforms. Also, remember to check out the Financially Incorrect podcast. And if you're just beginning your trading journey, remember to check out the Novice to Pro series available on FX Pesa YouTube, and to register for an account available on the links on the description below. So if you're watching this on X, just visit FX Pesa Twitter handle or go to your Play Store and download the Equity Trader app to begin your trading journey. So that's it for the day. Thank you very much, everyone. And I hope you trade from an informed perspective. Expect increased volatility in the markets today. So your number one priority today should be to protect your capital. Don't let these short-term events be the ones that eventually burn your account. So make sure that you protect your capital at all costs.